Hey everyone, how's it going? We just got the closing bell for Thursday, September 19th. And yesterday, what we saw was a bunch of US hedge fund managers, or not just hedge funds, but all types of funds, institutions, being really uncertain about what to do because Jerome Powell just wasn't really making a lot of sense. He decided on or the Fed decided on a 50 basis point rate cut, but Jerome Powell couldn't really explain it. He couldn't give us a satisfactory reason. He kept saying, "Oh, just take it as a strength of our commitment, the strength of our commitment." And that's just not a compelling reason for markets. So fund managers, US fund managers didn't know what to do with that. Overnight, over in Europe and in Asia, they took it as good news. Maybe they don't listen to the announcements as much. Maybe they're just not as in tune because I know I'm not in tune with what the European central bank does or Japanese central bank does. I might just look at, oh, they cut rates or they raise rates. I might not go in as much detail. So they took it as good news and we traded up overnight. But take a look at this again. Completely flat from the open on the S&P 500. So the US, they're like, okay, fine, we went up, but then they didn't take it anywhere again. So we have the first rate cut in 4 years. It's a 50 basis point rate cut, which is as big as it gets. And we have a gap up day and then it goes nowhere. It doesn't keep on running and continuing. So that's not really good news. So this gap up, I'm going to be very suspicious of it and just it may just be temporary and we might come down and fill this gap. And we might do more than that because of all the reasons that we talked about yesterday, that we're going to be suspicious about the ability for this market to move significantly higher. This is not significantly higher. This is just a little gap up. It's 1.69%. That's normal. We've seen this gap up was 1.71%. So it's a normal gap up. It's not anything special or anything crazy. So what we want to look at right now is, well, if everything was momentum wise wasn't looking great yesterday, and how about VIX? Did that improve at all with this jump up? I don't know. I haven't looked at VIX yet. I've been staring at the S&P 500. So I don't know. I don't know if volatility moved and we want to look at that relative strength. We want to look at everything and all over again and see, did the picture change or does it look the exact same or just at a slightly higher level, which makes it a little bit more extreme than yesterday. So that's what we're going to do today. Before I do that, let's take a look at how the S&P 500 behaved intraday. You can see that the initial reaction from the US was to take profits. So we took profits in the morning and then we decided, oh, okay, well, we're not too sure. We went up for a little while and then we came right back down towards the end of the day. So this is a choppy day. It's a choppy day. It's not directional. Towards the end of the day, overall, the slope was upwards, but we ended where we opened. We ended where we opened. So that is not super encouraging. So let's take a look at what our volatility did. And it did come down, but we're still at 16.21. We're still above 15. We're still at elevated VIX levels, and 16 is still above, where was it? July 17th? July 17th, right here. 16th. Let's find out the exact day. 16th. July 16th, we are at 13. So we still have this upward slope, even though the market has now made a new all-time high once again, and a new all-time high in terms of closing. So we still have elevated VIX levels. That is telling me that institutions aren't 100% buying into this yet. Let's take a look at our relative strength. Okay, so still downward sloping, not as downward sloping as yesterday, but still downward sloping. And now we have even more of a divergence because now that instead of being flat is now upwards. So that isn't looking super great. And now let's take a look at our momentum levels in terms of 90-day highs. Got 447. What do we say when we get above 400? In the next few days, it's going to have a mean reversion. It's going to come back. So what that means in the current environment is I expect a filling of the gap, maybe coming back to the EMA 8. Maybe it'll turn into something more than that, but just purely in terms of the 90-day highs and 90-day lows, I can't say anything beyond maybe the EMA or just filling the gap, really. EMA 8 is not that much more of a stretch, so we can kind of expect that maybe we'll come down to the EMA 8. But beyond that, the momentum, that particular momentum measure is not super useful to us. So let's keep on digging. 90-day lows, 7. 7 stocks made 90-day lows. Let's see what that was yesterday. 8. But let's take a look. All of these are ETFs, except for Boeing. Every single one of these is ETFs. The only stock, and they're inverse ETFs, or Bitcoin, ultra short, short, Dow, Bitcoin, and then there's Boeing. So basically, the only stock that is making a 90-day low is Boeing. So they're kind of bucking the trend right here. And did they? What's this low right here? 154.02, 154.28. So there's something wrong with my stock fetcher. It's not completely up to date. It didn't make a 90-day low. So this is wrong. Okay, so basically zero. Zero stocks made a 90-day low. That is an extreme. I don't see zero ever. I don't even that is just kind of a anomaly and it's probably something that can't last. So I'm going to expect these 90 lows to start shooting upwards, and I'm going to expect these 90-day highs to start shooting downwards. That means we're going to expect a mean reversion or a pullback in the S&P 500. Again, it doesn't mean it has to go super far, but what we're saying is don't expect that the S&P 500 to keep making all-time highs. We've run up. This is our run up, and now it's time for a consolidation or a mean reversion. So in the very short term, we're going to go and count on this S&P 500 reverting to the mean. After that, could it make a new all-time high? Sure, it can make a new all-time high. Is it going to be super high or going to run super far? Most likely not. We have the elections to start thinking about. We've got volatility in terms of quadruple witching tomorrow. So there's still a few things in the way of the S&P 500 moving upwards. It can move out higher, just not that much more higher. And then, of course, we have all the same risks we had yesterday to the downside. If we break the MA50, then we're likely going to see the MA200. If we break the MA200, then we're looking at bear market territory. So it's a little too early to talk about that just yet, but for now, a mean reversion right here. So in my portfolios, I went neutral and I had a hedge to the downside. Remember on option strat yesterday, we took off the long side XHB. Let's see XHB. Let's see how they did today. Okay, gap up, came way back down, filled the gap and went back up. So we would have made a little bit more money if we didn't close that out, but that's okay. We still have on this SMH. And I said that I was going to keep it on until the end of the year. So in my portfolios, I'm neutral. I have a hedge to the downside. Guess what? Now I'm expecting a pullback. So I'm expecting this hedge to work in my favor. If I'm neutral, that's great, because if I'm in terms of long short pairs, or if I have offsetting sectors, it doesn't matter really how I neutralized it, but a downward movement should benefit the downward pointing positions. And on net, I should still make a little bit of money, but if not, the hedge is there in place to help me make that little bit of money. So what I'm going to look for today, because of what we are starting to see, is that this market has gone up a little bit too far, and it wasn't driven by U.S. institutions. And the U.S. institutions are still hesitating. So it looks like we're due for a mean reversion. And I'm going to look to go baby bear in my portfolio, short-term baby bear. And then if we hit that EMA 8, I'm going to reevaluate. That's the wrong symbol. If we hit this EMA 8, or at the very least fill this gap, then actually this gap, this close, 561.40, and the EMA 8 today, 561.50. Technically, if we fill the gap, then we've already have touched the EMA 8. So same thing here. I'm looking for a mean reversion at least to the EMA 8 and maybe further, but I will reevaluate once we get to that EMA 8. Today, I'm going to be looking for short-term, short opportunities, 1, 2, 3, 4, 5-day trades. Maybe a little bit longer than that, but really not much longer than that. I just want to take advantage of this extreme level of momentum, let it pull back some, and then see where the market goes from there. Is it going to chop sideways? Is it going to continue going down a little bit more? Is it going to continue down to a more extreme? Very unlikely, but maybe it will. But the point is that I'm not going to make that decision ahead of time. I'm going to wait and see what happens to the S&P 500. The decision I'm making now is a baby short to the EMA 8 mean reversion on S&P 500. So I'll take my cues. So if I take a short in, I don't know, well, let's see what the worst sector was today. Okay, worst sector looks like XLU, XLP. That makes sense because if we really are risk on, but then if we take risk off, they might do well. So I don't necessarily want to go into that today. Anything that was extreme, let's take a quick look at SMH. Let's see what happened there. Yeah, we gapped up above the MA50, but failed at the EMA 100, and also happens to be one of the quarterly VWAPs over here. So I might look at SMH, undo the move that we did, or let's look at some sectors that are looking weak. Energy, looking weak. That's not really related to any of the things that have been in the news. Retail is not looking super hot. Let's look at retail. I would look at energies also. Energies and retail. Okay. So we'll go over here. We'll take a look at what are the weakest energy and retail stocks. Let's see what the best way to do this would be. Let's just look at the S&P 500 stocks. That might be a little easier. And we'll do this in reverse order. So we'll have the weakest ones at the top of the list. You can see that SMCI is not doing well. And this is really interesting, SMCI. It's been bearish all along. It had some negative news about potentially some accounting scandals. It recovered with the market a little bit, but not that much, just to the EMA 8. And it had a weak day today. It's relatively weak to the market. It is up only 0.07%. S&P was up 1.69%. QQQ is up 2.53%. SMH is up 4.34%. So SMCI is only up 0.07%. So it came and it hit this plateau. Everything that's going on in the market did not help it move upwards. We did come and see a low, at the very least a 90-day low, and now it moved upwards. and is getting stopped out at this level. So this is actually a really, really good candidate for a short. I like this a lot. I don't even know if I need to look at anything else, but it was not in one of the sectors I identified. It was in the semiconductor and tech space, which was the very first one I said, but it's not in the energies or the, what was it? What was the other one? The retail, energies or retail. Let's take a, I like it. So let's just do a quick additional scan. Okay, Dollar Tree is very similar. It gapped down on earnings and then it drifted upwards, benefit of everything that happened in the market over the past week or two. And today it's weak. It's down. I can't. Dollar Tree down. Yeah, it's down 2.37%. I really like Dollar Tree short as well. Dollar Tree would be not, it is retail, but it's discount retail. I actually like both of these. Let's see what else. Dexcom, Dollar General. Okay. Walgreens, Booz Alliance, Bath, Bath and Body Works, retail. We have a lot of good candidates here. Lululemon. There's a lot of great candidates. It's a great time to be hunting for some shorts right now. So we've got BBWI, we've got Dollar General, we've got Dollar Tree, we've got Lululemon. We got SMCI, and let's take a look at all of those. Let's take a look at BBWI. Okay, so this one is actually up on the day, 0.71%, a little bit above the EMA 20. So this is a little bit stronger than the first two that we saw. So I'll just take that off the table since I like the first two so much. Let's look at Dollar General. Dollar General should be very similar to Dollar Tree. So if of the two, I would only pick one, whichever one looks worse. So this one slightly drifted upwards. It's down 0.41% on the day. It is technically still barely above that EMA 8. I believe Dollar Tree was the better. Oh, it's above completely the EMA 8, but it did come down 2.37%, reject the EMA 20 today. Did they have earnings on the same day? September 4th? August 29th. No, just very close to each other. How much volume in Dollar General? 4.4 million. Dollar Tree. 4.4 million. Okay. I like Dollar Tree a little bit more. So we will just pass on Dollar General, pass on BBWI, and let's look at Lululemon. Lululemon came up further. It started to recover way back here. And so this is actually looking like on a shorter term, it's looking like it's trying to recover after this downward movement right here. And maybe it can, maybe. So I'm not going to pass on this one as well. So that leaves us SMCI, Dollar Tree. There is one more, I think. No, that was it. I wasn't really considering Walgreens. So the first two, SMCI, Dollar Tree. One, two, three, four, five, six, seven, eight, nine, 10. One, two, three, four, five, six, seven, 8, 9, 10, 11, 12. I like Dollar Tree a little bit more. We filled the gap right here. There's at least halfway the gap. Halfway the gap. I'm going to go with Dollar Tree. So let's look at some options. Go out a month. Nice tight bid ask spread on the 70. Terrible on the 74. It's an odd strike. That's probably why. We have a 75 strike right here. That's very good. So it's going by fives. And then for whatever reason, we've got that 74 right there. And then after 75, we go up by we we got a strange 76, 77, 78, no 79, and then we go up by fives again. So all of these are, you can see how there's really big bid-ask spreads on these. It's because they're weird strikes. I don't know why they exist, but someone wrote them into existence. So there would be 70, 75 would be the ones that we would look at the most. 75 is about a 50 delta. 70 is about a 28 delta. I would prefer to be closer to 50 to 70 delta, or 80 is at a 79 delta. So I would, and it's a little wide. So this one, 15 cents wide bid-ask spread. We've got a 6-cent bid-ask spread on the 70. If we move down $1, we move 28 cents. 28 divided by 355. Oh, sorry. 28 divided by buck 43. Okay, it's about 20%. And what about the 75 strike? 50 divided by 355. Oh, 360. 14%. I'm going to go with this 75. Okay, so we'll price that out on option strat, long puts, Dollar Tree, October 18th, 75 at about 357 and a half. That looks good. So this was a post market. So that's how we evaluate. That's how we go broad. We look at everything that's going on in the overall markets. We don't get excited just by price action. We look at it in the context of everything that is happening in the markets. We took relative strength into account. We took volatility into account. We took momentum into account, and we took levels into account. So when we decided on Dollar Tree, I guess we could do one more layer, can't we? Let's take a look at Gamma and see what Gamma looks like on Dollar Tree. Why not? Since we can, might as well add that to our analysis, because that will give us a potential target to the downside as well. So we could, like I said, we're only planning on being in it for a few days. But if there's a compelling target, we might wait a little bit longer. So let's see how this looks. Oh yeah, look at that. A huge amount of gamma at the 77 strike, which is interesting because it was one of those oddball strikes. Let's take a look at that again. It's probably not. Let's see what expiration has that. '77 September 20th. And again on October 18th. Really? Let's take a look at that again. Oh, this is positive gamma. Positive gamma. Okay, sorry. We're looking at this as a put. So we actually want to look at this one, 70 or 65. 70 or 6. This is saying that there's some opinion, some force pushing it up towards 77, but we're counting on it going down to 70 or 65. So let's take a look at those. Okay, so let's look at 77. And then another one at 70. And another one at 65. Okay, so that's pretty interesting. We actually already touched 77 today. So we touched it and we backed away from it. So that means I can most likely safely ignore this one for now. It already got rejected. It came up and we bounced off of it. So that if we bounce off of it, then I'm most likely, if momentum carries and we're expecting the momentum in the market to start shifting to the downside, then it should start carrying us towards the 70 and 65. So I'm actually liking it quite a bit. Can we get down to 70? Looks like we can get down to 70 fairly easily. Not, I mean, all we have to do is break through that EMA 8 and we're pretty much right there. And then 65 is not pie in the sky either because we already went below that in recent weeks on the earnings announcement and the day after. So I'm liking Dollar Tree a lot. Initial target would be 70. If we reach that super fast, then we'll go for it. So that's how that's a little bit of planning. So remember that investing is a plan, trading is an activity. Trading is what gets us into the investment. So the rest of my plan is I have about a 5-day hold. So I'm going to give this out to, actually, I'll give it to Friday. So 6 trading day hold. I guess it would only be 5. Friday, yeah. So Friday to Friday would be 5 trading day hold. And then it will set an initial target for 70. And if it looks like it's going to hit that super fast, super easy, then we will consider adjusting that target down to 65. So that gives you the whole picture. We started out broad, we came down, we looked at the market conditions, we found a trade idea, we decided on the timing of that trading idea, and now we're deciding on the execution. We've looked at the exact symbol, we looked at the exact expiration, we looked at the exact strike, we considered the deltas, we even considered gamma, and using gamma, we helped us develop our trading plan. So now it's a matter of execution tomorrow and management after that. Okay, guys. So we'll see. We'll see if this hits tomorrow, and I'll see you in the morning. Morning? Yes, I will see you in the morning tomorrow, Friday. Okay. All right. Bye, guys. Have a wonderful rest of your day.